All right, we are live. And let's take a look at what we've got going on. All right, so we are here pre market, and we're just going to take a look at where we're at. My open positions, we run through my open positions here. ZB, that's 30-year notes, been open 19 days, and we're kind of upside down on that one, but we're just carrying that one. We're just going to let it go. We sold the 108 put, and it's currently at 110.14. That's kind of a very slow moving grind of a profit. Amazon. Looking over Amazon, we're holding 100 shares. We've got a 220 put, a 245 put, and a 260 call. We're into the 100 shares at 256.99. And in this case, I did have when Amazon was higher, I had a stop loss set to close that. And for some reason it gapped over it overnight. So I went and closed the stop loss, and I'm just trading the shares. I think today I'm going to close this 220 put. That 220 put is using about $2,200 in buying power, and so far we've made $400 on that. So 350-ish dollars on that in 27 days. So the resulting profit was 350 divided by 2,200 was a 15.9% profit in 27 days on that. So I'm going to go ahead, and when the market opens, I'm going to look at closing that one. This one I'm going to leave open. It's a little closer to the money, and we'll see what happens on that. Google. On Google, I'm holding 100 shares. Here we go, market open. So first thing, the market open, market's bounced up some. I'm going to let this settle on Amazon. Let's take a look at that. And let's just, all right, so the spread is 262 to 286. So I'm going to go kind of in the middle. And what you'll see is that's going to put down, give me back $2,188 in buying power. And it's going to close that position. I'm going to see if I get filled. There's my bid right there. Went in. And I'm just going to give it a little time to see if it gets filled. We can creep it up a few pennies. This is finding the spot where it's saving us a little bit of money. Instead of, we'll let that one trade and see if that closes on us. If it goes down, it might not. No harm. Google. Let's see what we got with Google here. Google expires on Friday. I still have about $300 more I can pick up on that. And I'm okay with that one getting called away if for some reason it were to fly up. I don't need to hold that. And let's just look at what it would be to roll it out to 6, 8, or 10 days out. Let's say we wanted to roll it to the 31st. Oh, there goes that Amazon closed. Nice. At 370 would be 470. And we are at three. Oh, there's no action there. I'd have trouble closing it if I wanted to. See how that spread's super wide? There's nobody trading that. Oh, that's 722. That's why. 724. Much tighter spread. There we go. Right at the expected move up. We'll just let that one. We'll let that one go and see what happens. QQQ. All right, we've got this is my bread and butter here. QQQ opened up this morning. It was down in the 695 handle, 696 overnight, and we opened in pre-market. We were running 703 up to 706. We'll let the market kind of steady, and then we'll take that trade. SpaceX went up overnight and then pulled back a little bit. I did accidentally buy another 100 shares of that. I got assigned at 145. I accidentally clicked the button and bought 100 shares at 121-ish. Sold that covered call yesterday for $410. It's up $55 on that. We're going to let that run. Still sitting on SLV. So, my trade for today. Did I see anything else I wanted to trade? Let's just run down AMD. I was going to trade AMD. Let's take a look at AMD. So I was thinking about trading AMD for end of the month, 10 days. At right in here, 450, 455. So let's do a 10-day move AMD. I meant to grab it yesterday and it was a little lower. And let's just look at the AMD chart. I don't do a ton with charts. I do, but I don't. So AMD, I really wanted to grab this down here, and I was busy last week and just didn't. And now we're back on this upward trend. I really wanted to grab this move down here. But you can see it had a really hard bottom. I'm very comfortable, I think, at 455 for a week. So let's do 450 and let's go 20 wide. 450, 430. So we're selling the put at 450 for 710. We're buying that back. This is a put credit spread for 430. So it's a 20 wide risk or $2,000. And we're bringing in a credit of 265. So $265. That's $1 per share. 100 shares at $2.62 now. Divided by $2,000 risk, 13%. We're going to have that's a 10-day out. Now, if you noticed, it showed the risk as 17 something, or the buying power reduction is 17 something. That's because it takes the credit that I'm getting and subtracts it from the 2,000. So I'm going to automatically go back. Wow, that was really wide. I probably shouldn't have taken that. It's pretty wide spread on that. But I'm going to go ahead and set that to close at 120. So making about 100, closing about halfway, making about $100, $120. So really basically call it 120 out of 2,000. Making 6% in 10 days is my target at a relatively low risk. And again, delta is the amount of money that the option moves with a $1 move in the underlying asset. And as you get closer to the strike price, delta changes. But we use it as a percentage of the risk. And what we'll see is we go back in here on Tastytrade, which I like Tastytrade. There are other platforms. I also use Robinhood and Charles Schwab, and the Thinkorswim. But with Tastytrade, it breaks it down. So the probability of profit on this is 83%. The extrinsic value, that's basically this price, 260. The probability of reaching a 50% profit at any time before expiration is 81% on this. So and now 83 because it keeps moving. But what that means is I set that to close at 50%. I am 80% of the time, that's going to be a winner for me. Max profit, 262 if I carried it to expiration. Max loss is 1741 because I got paid this up front. So it's my $2,000 wide spread or $20 wide times 100 minus the money I received is my max risk. That's my trade on that. And let's look at QQQ here. So I rolled this out. It's already 7 days. But let's trade at the 10 delta, 670, and we'll go 40 wide, 670, 630. So we're risking 4,000 minus the fees, right? Probability of profit on this is 92. Probability that you're going to hit profit at 50% sometime is 85. So we're picking up $133 on the $4,000 risk. I guess you could say 3871, but now 129. So 3% in a week. All right, and I'm going to set that to close. Now this one I don't set it halfway. This one I set a little bit lower. I'm going to set that to close at 40 cents. So theoretically on that, I would make about $90 if the trade goes through. So $90 on 4,000, 2.5 for 2.25% for the week. Now I'm going to do, since QQQ is up and down, I'm going to take the opposite side of that and turn it into an iron condor. But I do run the legs kind of separately. I don't take it on and off as an iron condor. What I'm going to put on now is a call credit spread. And let's see how that looks. So I find to run it at the same delta, so that was a 10 delta, there is still definitely put skew on there. One standard was 732, so it's about $28 up, and really about the same down, 24. So I'm going to sell the 730, and I'm going to buy back the 750. So we're going to go $20 wide on that. And what you'll notice in this order is it's actually going to give me the $81 in buying power back. Even though I'm a max risk of 2,000 because we're 20 wide, because I'm on the opposite side of that, it doesn't take any more buying power to open that trade up. So I'm not saying it's a free trade. It still has risk, and your risk is the same, but I can't lose both. I can't lose down here, and I can't and then win and lose up here as well. So because I can only lose one, it doesn't hold any more buying power. I guess theoretically, if it was a naked strangle, the market could move so hard that I would get a margin call on one side of it and they'd force it to close, and then it could rebound. They might just force them all to close and I could lose both sides if it did that. If I was on a super tight budget and didn't have the money to cover if I got margin called on it. I've never had that happen, but I guess theoretically I could see where it would force a close on one side and then rebound up and force a close on the other. That would be like the most extreme. I don't even know if I think theoretically it's possible, but I don't know for sure. So we'll go ahead and take this trade for $83 in credit, and then we'll set that to close if it gets to 40. I haven't been taking a lot of the call sides because the market's been down and then screaming up. And every time I do it, it kind of traps me. I feel like I'm getting suckered into that and I'm losing money. But we'll do that. And then the next trade, we're going to go out. It's time for my longer trades out. So we'll go out. I did not trade last week on my 6-week trades. We're going to go out to this 41 day, and we're going to run this down to right in here, that 16 delta. We're going to go 40 wide, so 640, 600. And what you're going to see is this is a 7 weeks out, and this one we will try and manage at 21 days. This is a lot lower, even though we're at a higher delta, this is a lot bigger move. We're still one standard deviation out, right? And now we're at the 16, 17 delta as opposed to 10. But what we're going to see is that we're a lot further out. This would require a 10% down move in the NASDAQ in the next 7 weeks. Possible, yes. Probable, less. So in this trade, we're bringing in $337 off of 4,000, 8% over 7 weeks, 1% a week plus, which is my kind of my target on the bigger stuff is 1% a week. And the reason we're able to do that right now is a nice high implied volatility. And then I'm going to set this automatically. Set an order to close at $1.50, about halfway. And normally these will close long before the 7 weeks. At 21 days, we'll manage this and take a look at what we want to do. But that is it. Folks, I know people are watching this. I see the views. I know this isn't necessarily a good time. That's for me. I try and trade this morning. I'm in and out. This was what, 20 minutes? I'm in and out of my trades in 20 minutes. And then I very rarely jump on later in the day unless I see something I need to do. Because I do set everything to just close automatically. So if you have any questions, throw them in the chat. I will take a look at that, even if it's if you've watched this afterwards. And do me a favor, if you like what you see, if you're interested in this, click the like, click the subscribe. And I do plan to be on every day this week. So feel free, about 9:30, I'll be jumping on, running through my market analysis and where I'm at and making my trades. Thank you very much.